my fellow REIT investors and investors. Now, for the Valentine's Day program, because I have been a very happy person after I married my wife, every Valentine's Day has been a great blessing. That's why we're doing this special for you so that you can actually position your investment portfolio well. You'll be thinking and scratching that, huh? Is that possible to invest and position in REITs for Valentine's? No. Okay, I'm talking about essentially what is the key product that most people are looking for during Valentine's Day. Well, take out your head, scratch your hair a bit. So, what is the product that will sell well? Ha, ha, ha. Your guess? Anybody's guess? Anybody's guess? Yes, it's chocolates, ladies and gentlemen. So in today's video, we're gonna talk about chocolates. Yes, ladies and gentlemen, you'll be surprised how resilient chocolate industry is and how profitable it has been. So let me share with you, ladies and gentlemen, the chocolate companies that I personally have invested in for the last 20 years and how they have performed. And therefore, when it comes to Valentine's Day, you notice that these chocolate companies, be it Nestle, Mondelez, Ferraro, Mars, Lindt Chocolate, Stock, Storck, or Hershey, will do very well. In fact, if you look at the annual reports of all these companies I've mentioned, roughly 10 to 18% of their total revenue each year are derived from Valentine's Day sales. So, are you excited for it? Well, let's hit on it. Okay. Well, ladies and gentlemen, the first slide does shows you that chocolate actually gives you the love that you need. Yes, look at my investments in this company called Hershey, right? This is a company that has been up 118% in the last 3 years. If you bought it at 3 years ago, when we were buying it, it was at 110. This was actually topping up my Hershey, not the chocolates, but the share in my portfolio, because of this COVID-19 sell-off. So from 110, it has actually accelerated up to 240. In fact, last night it closed at about 239. So I'm actually up like almost 180% in 3 years. And this is not taking into account the dividends that I've been receiving. The dividends I've been receiving on a yearly basis ranges from 2 to 3% on Hershey. So what is actually Hershey and what is actually so exciting? Now this next slide shows you is 10 top two products. That is the Hershey milk bar chocolate and the Reese's, all. And subsequently, some of the other best products is actually kisses. Yes, ladies and gentlemen, they send you kisses via their chocolates. And that's why these products have been the best selling, not only just this year, but even 50 years ago. Yes, yeah, that's right. Right? They have been best selling chocolates for many of you even before you were born. So, what best is to buy into companies whose products are practically inelastic. They are demanded not only by people in Asia, Europe, and North America, but are best sellers not only just 1 year, but in 50 years, even before the Singapore REITs market was even born at all. All right. So what's so spectacular? Just look at, ladies and gentlemen, the next chart. The next chart shows you the latest results from Hershey Chocolate. Okay. Now, what's got me into chocolate companies is this: is that if you look at Hershey Chocolate, the latest results ended 31st December 2022. The results was just announced later part last week. They did net sales of US 10.4 billion. And guess what? Their operating profit was 2.26 billion. You'll be thinking, oh my god, chocolate companies can have operating margin of close to 25%. Wow. Now, if you scrutinize, ladies and gentlemen, all the top companies in Singapore, be it SIA, Keppel, Sembawang Industries, your so-called blue chip like your banks, do they actually post operating margin of 25%? No, man, far from it. right? So if you have chocolate companies just selling one simple specialized product, giving you operating margin in excess of your so-called blue chips Singapore can do. So what should you do as an investor? Well, this is something we've been doing for the last 33 years, and that's what we share and teach in our investment classes. So, if you look at the net profit, Hershey actually posted a net profit of 1.6 billion, meaning that after all the interest expenses, taxes, and taxes in Europe, because Hershey is actually located in the US. So its entities in Europe actually pay high European tax as well. Even that, they are able to post 1.64 billion on a turnover of 10.4 billion, meaning that their net operating margin is as high as 15%. Wow, you may be astounded now, right? Okay, and if you look at the next slide, ladies and gentlemen, then balance sheet of Hershey chocolate is very simple. Okay, so like we have always been propounding all these 33 years in investment teaching, the best companies to have in your portfolio are the ones that make simple products demanded by everybody and loved by everybody. More so during Valentine's Day. Right? That's why in looking to position in chocolate companies in view of Valentine's Day has become something that I've been doing all these years. It's something that we hope we can share with you. And just look at Hershey Chocolate. It's a very simple company. What is their total assets? Yes, you are right. As at end of last year, it's 10.9 billion, of which their cash is half a billion. You'll be wondering, wow, a great company like this don't need to have maintain such a high cash balance. That is right, because its operating cash flow is very high. So almost every other day they are draining in money, from their various operations worldwide. And it's the kind of companies that I have been having in my portfolio. Not only just REITs, huh? Yeah. And if you look at the liability side, ladies and gentlemen, you notice that it's uh, capital is 3.3 billion. But hey, look back. Okay, the previous slide, what did it say? The net profit. So this company earns net profit of 1.6 billion on 10.4 billion sales. But its capital structure is only 3.3 billion. So if you take the net profit of 1.6 divide by 3.3 billion, of capital, what do you get? Return on equity, right? And what is this amount? Holy shit. Oh, sorry, I should be saying holy chocolate. It's 50%. Can you actually make return on equity on chocolates at 50%? Wow. Think about it. Guess what? Hershey has been doing it. And it's not only just doing it just 1 year. It's been like that for many years. And look at the liability side. They only have one particularly long-term loan, okay, of 3.3 billion. You add it up to its current portion that's payable, it's 4 billion. So very simple. Chocolate companies, 10 billion total assets, of which 3 billion is equity, 4 billion is actually liabilities or long-term loan. So essentially, their so-called gearing ratio is less than 40%. Similar. If you're wondering why we got into chocolate companies, well, simple, right? The next slide you can see, that this is our Business Times interview, okay, where we say that we focus on ROIC or return on invested capital and EV/EBITDA when we analyze companies, not only real estate investment trusts. And yes, ladies and gentlemen, the beautiful lady next to me is my lovely wife, who has given me greatest amount of happiness, through our two kids. That's why Valentine's Day is always something loving for us. So, leaving you. Oh, sorry, it's like that. Yeah, like according to Korea, right? Okay. So let's analyze further on this concept that we have dwell when we actually talk about Hershey. Yes, ladies and gentlemen, this you can see is the earnings record of Hershey since 2015 right up to last year. So we have 2, 4, 6, 8 years of comparison. You can see, ladies and gentlemen, that the revenue almost grow year after year from 7.3 billion in 2015 right up to 2022, 10.4 billion. Yes, there is a you'll be surprised and scratching your head again because if you look at 2021-20 compared to 2019, okay, despite the COVID-19 crisis, this company can still grow the revenue from 7.9 billion to 8.1 billion. See, ladies and gentlemen, that's the beauty of chocolate. That is the beauty of Hershey Kisses, and Reese's chocolates. If you haven't tried, please try it because by buying it in the market, you're helping to push up the product, hopefully push up the share price, and I will be a more happy investor. Okay. Now, but more importantly, look down further. Okay. You look at the ROIC and the ROE numbers. You can see that the ROIC numbers or return on invested capital for Hershey has ranged from 21% in 2015 right up to 26% as of last year. So these are companies that are steady growers because their products are elastic, highly inelastic rather. Okay, and the ROE has been stupendous. 50, almost 50%, not only just last year, but in the last 8 years. In fact, in 2018, it went to as high as 84% in 2017. Rather. Okay, and you'll be surprised that the EBITDA margin is very high. It's more than 15%, right up to 23% last year. The high was 24% in 2021. Now, therefore, you can see this same numerics, this same benchmark. I can assure you in the last 20 years, none of the Singapore real estate investment trust is able to beat Hershey chocolate in this parameter all these years. That's a beautiful book which you must read. Again, this chapter, let me quote you. It requires knowledge, experience, and flair. And it goes on to define what is knowledge, experience, and flair. It says that knowledge born from actual experience is the answer to why one is able to make profit. Lack of this is the reason why people lose in the stock market. Knowledge means information and the ability to interpret it as what the market would interpret it. This is exactly what we have been doing in GCP Global for the last 33 years, and this is something we want to share with you in today's video as well as in others video. So if you want to actually enrich yourself, not only just through chocolates or real estate and estate investment trusts, do look at the next slide. This points you to our GCP Global website. You can see that in it is archived the last 33 years of our experiences, not only in real estate investment trusts, technology stocks, as well. It includes some of the gems that we've uncovered for our investors, as well as my own personal wealth, in the last 30 years. Now, let me just move on to the second chocolate company that we want to share today. And this is, yes, ladies and gentlemen, it's none other than Lind and Sprinkly. Okay, now look further at the share price. Oh my goodness, it went up to 100,000 Swiss franc, right? So for you to be able to buy one share, just one share of Link and Sprinkly, which closed at 102,000 Swiss franc last night. Okay, it will cost you the equivalent of about 100 the Swiss franc against the Singapore exchange rate yesterday or now. It's roughly 1.44. So you're paying close to 160, 170,000. Yes, for one share of Lin and Sprinkly, you probably cost you the cost of a car in Singapore at about 160 to 170,000. How have we done so far? Well, 10 years ago, when we first bought in, or rather when I first bought in, the share price was for Lin and Springy was about 40,000. Okay. And it went to as high, and it gave me a high last year when it actually shot up to 122,000. But you know what? Because it's something in my long term portfolio, over the years, I've learned not to actually get too high, too quick, because the share prices actually move too fast, too quick, because they will correct. And I'm so happy that when they corrected up to like 3,000 in December, I was able to add on in my portfolio. Now it's gone up to 102,000 uh, price. the price as of last night. So what's so special about Lin and Sprinkly? Okay, now first and foremost, you know, well, this is actually my interview in Business Times. Okay, where they have actually quoted or they says about me. This was actually in December of 2009, after I decided to quit in and step down in retirement and enjoy my life. It says that I'm a millionaire with a heart of gold. Okay, it says that Mr. Gabriel Yap in his 40s, yes, I retired in my 40s, senior dealing director turned philanthropist. You can read more about this article. Okay, now I actually went into Lynch and Sprinkly way back in 2009 after I've made enough money to retire, see the world, meet my wife, and that's how we invested in Lin and Sprinkly. Now, the beauty about this chocolates is that you can see now these are the latest products from Lin and Sprinkly. You'd be surprised that all chocolate companies, be it Ferraro, Mars, Stock, Lindt, Hershey, or Nestle, is coming out with the latest in vogue kind of chocolate products. And they are actually pushing a high dark chocolates to you with as a high percentage of cocoa, because it's proven that a high level of cocoa or dark chocolates is good for you. It lowers your insulin level. It actually prevents diabetes. It's good and help you to actually suppress heart diseases. That's scientifically written and proven. As you can see, some of the Lindt chocolates, you find it difficult to pronounce, right? Because I do, because it's called Ganjula Himish. Well, what does it mean? Well, but guess what? It actually prompts this new product to caters to the new millennia and the Gen Z generation. And these products are really selling well. Okay, and the next one that I want to show you is that this this I actually add more to my Lint portfolio because when I was working in Wall Street, I actually know this brand called Russell Stover. They're actually, I think, based in Pennsylvania. Okay, it's a company. It's been like there for the 100 over years old. And 2014, 2015, Lin actually offered to buy it over, and they bought it over at, I think, 1 over billion. And right now, Russell Stover, if you look at Lin's latest contribution, you know, they have made many times the purchase price. It's one of the rare acquisitions in chocolate companies on a massive scale, but you can see that the returns are great. And for me, as a shareholder, that's how I reap the returns as well. And then the next, well, this person would look familiar to you. He's none other than Roger Federer, the number one tennis player for the longest period of time, who is Lindt ambassador. Okay, of course, I actually think that Roger Federer is one of my idol because he's number one, very consistent in his tennis, as what we try to be consistent in delivering great returns on investments, not only just for myself, for my investor students at GCB Global as well. And he carries out with great dignity, something that we aspire for high levels of principles and behavior. And three, he actually is and are associated with top brands, not only just Lin and Springly, as well as actually Rolex. Okay, so of course, our Daytona, our Dive Master has gone up in prices, but you need the sharp eyes to be able to buy them when they are at good values, and that's what we do at GCP Global. So, hopefully, you enjoyed today's classes, or rather today's sharing, because it's more lighthearted because it's actually in preview of Valentine's Day. So, hope you can um, position your portfolio well for Valentine's Day. So my wife and myself actually send our kisses, Hershey kisses, and best wishes to you and your loved ones on this Valentine's Day. And mind you, we are still giving and extending our special early bird price for our 25th February class. Do sign up at GCP Global website. And cheers till next week.